Several exchange-traded funds have emerged as compelling options for investors, providing a strategic avenue to diversify their portfolios while capitalizing on rapidly changing market trends. Investing can be intimidating, especially for those who don't have the time or expertise to analyze individual stocks. The stock market is a vast and often unpredictable space, and while some investors enjoy picking and managing their own stocks, others prefer a simpler, more strategic approach. That's where exchange-traded funds, ETFs, come in. ETFs have revolutionized the way people invest by offering an easy, cost-effective, and diversified way to participate in the market. But what exactly are ETFs, and why are they such a powerful tool for investors? We'll take some time to explore this topic and show you the top 5 ETFs for 2025, each selected for its strong potential in the current economic landscape. Whether you're looking to invest in groundbreaking technologies, protect your portfolio from volatility, or simply grow your wealth over time, these ETFs could be valuable additions to your investment strategy. Let's dive in and uncover the best opportunities ahead. What are ETFs? At their core, ETFs are investment funds that hold a collection of assets, such as stocks, bonds, or commodities, and trade on stock exchanges just like individual stocks. Think of them as baskets filled with different investments, allowing investors to gain exposure to a broad range of companies or sectors with a single purchase. For example, instead of buying shares of just one technology company, an investor can buy an ETF that holds dozens or even hundreds of tech stocks, reducing risk while still benefiting from potential growth. ETFs can track stock indexes like the S&P 500, specific industries like renewable energy or artificial intelligence, or even unique investment themes such as sustainability or dividend income. One of the biggest advantages of ETFs is diversification. By spreading investments across multiple assets, ETFs reduce the impact of any single company's failure, making them less risky than betting on individual stocks. They also tend to have lower fees compared to mutual funds, making them a cost-effective choice for long-term investment. Additionally, ETFs offer liquidity, meaning they can be bought and sold at any time during market hours, just like regular stocks. That's something traditional mutual funds don't allow. Whether you're a beginner looking for a hassle-free way to invest or an experienced investor aiming to fine-tune your portfolio, ETFs provide a flexible and efficient solution. Some ETFs focus on high-growth sectors like artificial intelligence, clean energy, or blockchain, while others provide stability through dividend-paying blue-chip stocks or bonds. Understanding which ETFs are best suited for you can make a significant difference in building wealth and managing risk effectively. Top 5 ETFs to buy. Number 5. iShares MSCI Europe ETF IEV. Diversifying beyond domestic markets, the iShares MSCI Europe ETF offers exposure to European equities. Foreign equities have shown resilience, with IEV increasing by 10.2% year-to-date. This ETF provides access to a broad range of European companies, allowing investors to capitalize on opportunities within developed European markets. Incorporating international exposure can enhance portfolio diversification and potential returns in strong European economy, with countries like Germany, France, and the UK are seeing economic growth through this sector, offering stable dividends. One outstanding feature of this sector is the affordable alternative it provides to actively managed funds and the simplicity it offers compared to the complexities of buying individual European stocks. Its structure ensures high liquidity, allowing investors to buy and sell shares with ease on major stock exchanges. This flexibility makes it an attractive option for both long-term investors and those looking to capitalize on shorter-term opportunities in European markets. Number 4. Vanguard S&P 500 Growth ETF, VOOG. For investors seeking exposure to growth-oriented companies within the S&P 500, the Vanguard S&P 500 Growth ETF VOOG is a compelling option. This ETF targets approximately 230 top growth stocks based on momentum and sales growth. The portfolio leans heavily toward technology with additional focuses on communication services and consumer discretionary sectors. In 2024, VOOG advanced by over 40%, outperforming the broader S&P 500, and continues to be a strong contender in 2025. With their rapid high-tech dominance, companies like Apple and Google continue to lead the digital revolution. AI and automation drive growth in artificial intelligence, robotics, and cloud computing, which is rapidly accelerating and generating significant profits with massive growth potential. Number 3. Schwab U.S. Small Cap ETF SCHA. With stable pattern of growth, small cap stocks have historically outperformed during economic recoveries, and SCHA is no exception. In 2025, the ETF has shown significant growth driven by its diverse holdings across sectors such as technology, healthcare, and consumer discretionary with over 1,700 constituent companies. SCHA provides broad exposure to emerging enterprises poised for expansion. Small-cap companies are often at the forefront of innovation and growth. The Schwab U.S. Small Cap ETF SCHA provides exposure to a broad spectrum of small-cap U.S. stocks, tracking the Dow Jones U.S. Small Cap Total Stock Market Index. With an expense ratio of 0.04% and holdings in 1,738 companies, SCHA offers diversified access to the small-cap segment. In 2025, smaller companies are expected to benefit from falling interest rates and potential deregulation, creating an environment conducive to expansion and profitability. Now here's a little tip on what to consider as an investor if you wish to dive into this sector. While the growth prospects are enticing, small cap investments come with heightened volatility and risk. You should assess your risk tolerance and investment horizon when considering SCHA, although diversification within the ETF helps mitigate individual company risk, making it a viable option for those aiming to capitalize on the dynamism of small cap stocks. But it has the ability to innovate and capture niche markets, leading to accelerated growth. Number 2. Financial Select Sector SBDR Fund XLF. Investors seeking to tap into this potential growth may find XLF to be a strategic addition to their portfolios. Taking cognizant of risks such as credit defaults, regulatory changes, and market volatility. However, this sector's integral role in economic development and its adaptability to changing landscapes makes XLF a strategic addition for those seeking exposure to financial markets. The financial sector stands to benefit from potential deregulation and favorable policy changes anticipated. The Financial Select Sector SBDR Fund provides exposure to the financial sector, encompassing banks, insurance companies, and diversified financial services. With assets under management exceeding $30 billion as of January-February 2025, XLF remains a cornerstone for investors aiming to capitalize on financial industry dynamics. The Financial Select Sector SBDR Fund offers exposure to major financial institutions poised to capitalize on these developments. Analysts from Bank of America suggest that such policy shifts could extend the rally within the financial sector. Number 1. Healthcare Select Sector SBDR Fund XLV. Making waves. The Healthcare Select Sector SBDR Fund is vast and lucrative. It has demonstrated resilience and growth, making it a focal point for investors. In 2025, the Healthcare Select Sector SBDR Fund has risen by 7.3%, outperforming the broader S&P 500's 1.3% increase, encompassing a diverse range of companies within the healthcare industry, including pharmaceuticals, biotechnology, and medical devices. The essential nature of healthcare services often renders this sector a defensive play during market volatility, providing stability and consistent returns. The healthcare sector is poised for continued growth due to several factors including aging population. The increasing number of elderly individuals globally necessitates advanced medical care and pharmaceuticals, boosting demand within the sector. Technological advancements, innovations in biotechnology, telemedicine, and personalized medicine are revolutionizing patient care and treatment methodologies, making it essential regardless of economic cycles, and also providing a defensive buffer against market volatility. Nonetheless, the sector's intrinsic growth drivers make XLV a compelling option for those seeking stability coupled with growth potential. There's no doubt that the stock market is constantly evolving, and ETFs have become one of the most effective ways to diversify, grow your wealth, and reduce risk. But with so many options available, you need to choose the right ones, and this alone can be overwhelming. So selecting the appropriate ETFs requires careful consideration of your investment objectives, risk tolerance, and market outlook. Each of the reviewed ETFs is positioned for success in 2025, offering strong returns and diversification. Which one fits your investment strategy? Let us know in the comments. And don't forget to hit the like button, subscribe to this channel, and turn on the notification bell for new and educational videos about ETFs, stocks, and finance. Thank you for watching.